After Delhi, Karnataka became the second government to impose a weekend curfew in the state, starting this week amid rising COVID-19 cases. With positivity rate approaching the 10% mark in Delhi and around nearly 3% in Karnataka, the states are eyeing a total curfew over the weekend, including a shutdown of non-essential shops, malls, and more restrictions on public transport, weddings, and funerals. Maharashtra, Uttar Pradesh, West Bengal, Haryana, and Punjab too have imposed similar restrictions. Yet, the sporadic curbs and steep rise in coronavirus cases have failed to deter market bulls from their march. In the first 3 days of calendar year 2022, the BSE Sensex has already surged nearly 2,000 points, while the Nifty 50 has climbed about 600 points. So, are the bulls ignoring a potential threat from a third wave and localized lockdown? Vaibhav Sanghvi, co-CEO of Avendus Capital, decodes this market behavior.
What's happening is basically the markets are looking at a template, of previous lockdowns and some experience from South Africa as well, where we saw that the kind of infection on Omicron kind of spiked up with a very short period of time, but then later on tapered as well. At the same time, what we believe or what we see from the data perspective is that the infection is not as severe as what it was in terms of Delta. So in that respect, market is relatively more comfortable than earlier, even in spite of the rising infection. And two, that, as against the last 3 months of selling by FPIs, what we have seen in the first week of January is some instances of, or in fact, a welcome sign of FPI coming back in terms of net buyers as well. So when you have domestic flow, which is pretty positive, added to it, we have FPI flows, which starts to be positive, is when we think that the markets might, in anticipation of good quarterly numbers as well, might take a positive cue out of that.
Vinod Nair, head of research at Geojit Financial Services, too believes that since the severity of the Omicron variant remains low, the markets expect restrictions to be removed soon.
The experts, what they are saying, if you believe that Omicron is not that big issue, so these restrictions will be removed. And these restrictions are there, as an after effect of what has happened recent time because of the increase in cases. So I don't think Omicron or these restrictions is going to impact us when the Delta, much more issue, did not impact us. And now, we are in a position, the market, the economy knows how to work from home. So we are in a better off situation than what when the unknown issue happened in the 2020s, there was a lot of issue regarding this, but now we all know how to manage this situation. So I don't think this is going to impact us.
That said, mild consolidation cannot be ruled out over the next few weeks as investor focus will shift to key events.
We are now at the upper end of in terms of valuation and in terms of the trend also. So we can expect some consolidation maybe in the later part of this week, next week also. After these FOMC meetings and RBI meetings are there, and then the Q3 results will start. And then we also have to think about what will happen in the budget. So when market will start factoring those things, maybe in the near term, we will see some correction.
In nutshell, expectation of healthy Q3 earnings from India Inc. and resumption of FPI buying are outweighing concerns surrounding new virus variants. Thus, any lockdown, analysts believe, may not be met with serious correction as market participants will eye economic growth and the government's reform agenda. As regards Thursday, weekly F&O expiry and stock-specific action will remain key market triggers.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.